Broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, welcome to another CW webinar. I'm Tiago Sá, and me and my team are here to bring you the main highlights of the first quarter 2024 trade price report update. For today's presentation, I would like to introduce myself, Tiago, a business analyst at CW Group, and my colleague Beatriz Aguiar, a junior business analyst at CW. On today's agenda, we'll start with an introduction of our company, what it is, what we do, and what we have to offer, and share the main highlights of our new report. We'll talk about shipping and energy overview. We will talk about domestic prices, ex-works and retail prices. We will talk about trade prices, price assessments, and some closing remarks. First of all, I would like to introduce you CW. CW Group is present across 3 distinct branches, which are advisory, research, and media. Under the advisory umbrella, CW works with major global consultancies and leading institutions, including the World Bank. We provide consulting and advisory expertise on a diverse product portfolio. For example, a recent sample of advisory projects provided include a detailed study on circular economy for the Middle East, North and West Africa regions. And some other examples include a complete business process analysis for an online art gallery website. Under the research umbrella, CW focuses on global cement demand as well as detailed industry and country reports. We provide historical as well as forecasts for markets in a variety of products, including one of our main products, the TPR, Trade Price Report, that we are presenting today, and the VFR, Volume Forecast Report. We also provide commodity price assessments for cement, clinker, as well petcoke and coal. Last but not least, under the media umbrella, we can have online access to our vast database. You can subscribe to newsletters for topics of interest, including cement, building materials, paper and pulp, petcoke, bulk, and coal. We also have some industry-specific meetings. We have started to hold in person again after the pandemic, and our next meeting, called Cement Business and Industry Africa 2024, will take place in Johannesburg, South Africa, on the 16th and 17th of October 2024. So if you are interested, please don't hesitate to contact us for more information. So let's start with the Global Cement Trade Price Report, our update highlights. This is a quarterly updated report focused on providing a comprehensive quantitative and qualitative analysis on the trade of cementitious products. As always, it is our endeavor to continue expanding our coverage of cement trade prices, especially in Africa. The statistic model used for this report is updated twice a year, on the second and the fourth quarter. This report covers 99.6% of global trade of these products. Other details regarding individual and corporation subscriptions to this report are available on the link below. Although coverage for most regions is comprehensive in the sense at least one or more factors are tracked, our major focus is increased coverage of major African markets, hampered by a lack of consistent official data sources. Now, to start off, we are going to present the global economic prospects for 2024. According to the IMF's April 2024 update, the global economic growth is estimated at 3.2%, up by 0.1% from the January 2024 forecast. Global inflation is expected to fall from an annual average of 6.8% to 5.9% in 2024, with advancing economies returning to their inflation targets sooner than emerging markets and developing economies. US growth is estimated to reach 2.7% in 2024 before slowing to 1.1% in 2025 as gradual fiscal tightening and softening in the labor market slow aggregate demand. Europe is projected to recover from the Russia-Ukraine conflict impact slowly and is expected a strong household consumption as the effect of the shock to energy prices subside and the fall in inflation supports growth in real income. The euro area GDP is expected at 0.8% this year. In the case of emerging markets and developing economies are expected to rise modestly to 4.2% in both this and the next year. Russia's growth is expected at 3.2% in 2024 and 1.8% in 2025 as the effects of high investment and robust private consumption fade. Growth is projected to be around 3.4% in the sub-Saharan Africa, returning to pre-pandemic levels. In conclusion, and to sum up this page, the global economy outlook for this year is characterized by cautious optimism tempered by persistent challenge. Considering the recent conflicts, it's very hard to have a better understanding of the trade price for cementitious products without looking at the main sea and container freight trends. This is what we are talking here on this page. The Baltic Dry Index, which tracks rates for ships carrying dry bulk commodities, settled at 1,804 points as of April 16. This is the highest value since late March. This increase was propelled by rising rates across all vessels. On the other side, the surge in container freight rates has been gripping our attention since September last year. There are multiple factors that are playing here, especially the disruption in the Red Sea that have been a significant challenge, exacerbating capacity constraints and equipment shortage. These disruptions have forced container carriers to divert away from the Suez Canal, further tightening capacity and driving up freight rates, particularly in key shipping lanes such as Asia or North America and Europe. This page is an overview of energy prices evolution to better understand its impact on production costs and transportation. In March, bunker IFO prices increased by 1.2% in the Med Basin on a monthly basis, while during the same period, prices increased by 1.8% in the Persian Gulf and 4.3% in the Northern Europe. The rising tensions between Israel and Iran are estimated to increase the bunker IFO prices in the coming months. China's economy has improved in the first quarter and is expected to grow stronger in the next quarters, which will positively impact bunker fuel prices. In addition to the above, oil production and exporting countries, OPEC, are considering reduced crude oil production, resulting in an increase in bunker prices in the coming months. Europe's crude oil prices are increased after a low point in December last year, although in March, crude oil prices in Europe were relatively stable, witnessing a slight decrease compared to the previous months. Things have changed in April, with crude prices expected to increase due to the rising tensions in the Middle East. In March, the Newcastle coal price reached $130.6 per ton, up from $130.1 per ton in the previous month. I would like to pass the presentation on to my colleague Beatriz. Thank you.
Hello everyone, my name is Beatriz Aguiar and we will move into the second part of our webinar. In this part, let's focus on price movements, demand fluctuations, and the strategic positioning of major players in the market. Let's begin by examining the export cement price variations across different regions. In Spain, we've witnessed a significant increase in prices, up to 10%, driven by increase in raw materials costs and inflationary pressures. Argentina is also seeing a big increase in prices due to inflation. On the other hand, Russia has experienced a slight decrease attributed to a decline in demand by the ongoing economic sanctions. On this slide, we can see ex-works price movements on a year-on-year basis. In this quarter, we anticipated a diverse range of export price variations across different regions. The market landscape is set for notable shifts, ranging from a substantial 35.5% decrease in sub-Saharan Africa to a noteworthy increase of 8.2% in South America. Specifically in North and Central America, we forecast a modest increase of 0.8% in cement export prices compared to the previous year. Costa Rica is expected to lead the region in price increases during this period. Moving to South America, we project the average cement export price to reflect a slight 0.8% decrease quarter-on-quarter, but a 5.2% increase year-on-year. Colombia was the country with the biggest increase quarter-on-quarter. Meanwhile, in Western Europe, the regional average export price of cement is anticipated to rise 5.2% year-on-year and 2.1% quarter-on-quarter. France is poised to witness the most significant increase in period due to volatile energy prices, exerting upward pressure on cement production costs. On this slide, we have the retail price variation, mirroring the trends observed in export prices. Regions including the Med Basin, South Asia, Central America, Western Europe, Asia Pacific, China, the Middle East, and Eastern Europe witnessed increases because of the geopolitical conflicts. For example, in the United States, in the first quarter of this year, the average cement retail price is expected to increase by 7.8% year-on-year, while on a quarterly basis, the price is expected to increase by 5.2%. Meanwhile, the retail cement prices in Canada are likely to see an increase this year due to a combination of factors. Firstly, sustained demand from ongoing construction projects, both residential and non-residential, is putting upward pressure on prices as suppliers seek to balance supply with increased demand. Secondly, disruption in global supply chains, coupled with transportation challenges and shortage of raw materials, contribute to higher production costs, which are often passed on to consumers. Now I'm going to talk about trade pricing. On this slide, we have the cement demand in select markets like Peru, Spain, Brazil, Pakistan, Taiwan, and Argentina. In March this year, Spain's cement demand fell by 3.2%, and this is because of the rising of inflation and interest rates alongside limited infrastructure investment by the government. Brazil has witnessed a 10.4% year-on-year decrease to 4.9 million metric tons in March this year. And this is because of the intense rains, and fewer workdays affecting cement sales. Otherwise, construction remains optimistic despite these challenges. Now, turning our attention to this slide, Turkey continues to be a significant player, boosting surge in cement production despite a decrease in the sales. The industry has faced challenges due to increasing domestic demand and unpredictable global conditions, highlighting its ability to withstand tough times. Turkey's main cement export markets include the United States at 37.2%, Israel at 23.9%, and Syria at 7.8%. Now, on this slide offers insights into the cement, slag, and clinker prices index. Cement prices witnessed a resurgence of prices in the first quarter, driven by multiple factors, increased demand and logistic costs stemming from escalating conflicts in the Middle East. Additionally, China experienced a spike in cement prices as the government initiated more infrastructure projects to stimulate economic growth. Meanwhile, in the US, robust economic conditions and above average inflation rates contribute to the uptick in cement prices. Now, on clinker prices, we can observe more variability in clinker export prices. Major exporters like Turkey and Vietnam grapple with reduced demand from primary markets, although signs of recovery, especially from China, emerge in the new year. Looking ahead, it's anticipated that clinker prices will move in closer alignment with grey cement prices in the forthcoming quarters. Volumes and prices for white cement in the first quarter have seen a decline as freight costs have increased as a consequence of logistical challenges arising from the ongoing conflicts in the Middle East and attacks on the ships in the Red Sea. However, any decline is expected to be temporary, given that white cement is a premium product and due to its applications cannot be substituted. Slag prices have remained relatively stable and are expected to do so in the coming quarter as well. Increasing steel production in China is expected due to the demand from infrastructure as the China government allocates more funds. Steel production is expected to remain strong in this year, and both India and China will see new BOP capacities come online this year, helping boost global slag supply. Japan will remain the dominant global slag supplier and price setter. Now on this slide, I'm going to talk about the price assessments, spotlighting the divergent trajectories across different regions. The cement and clinker FOB prices are going to decrease in the Middle East, in the Med Basin, and in the Persian Gulf. We expect that the FOB prices in the basin are going to increase because of the inflation in Turkey and ongoing conflicts. Cement prices in East Africa are going to increase in this month, and we expect to continue to be. In Pakistan, we can see that cement bulk prices at the Karachi port are higher compared to those within the country due to proximity of major companies such as Lucky Cement, Tok Cement, and Power Cement. Now, let's complete our presentation with some closing remarks. South Asia and South America are expected to witness the largest increase in exports and retail prices in the first quarter of 2024. Many markets experienced a year-on-year contraction in cement demand during the first quarter of this year. The nomination of Turkey and Vietnam as major exporters of grey cement and clinker has remained consistent over the past years. The CW price indices for the export of cementitious products are expected to see varying levels of increase. OPC cement and OPC clinker FOB prices are continuing its downward trajectory in March in Med Basin and Persian Gulf. CFR prices for grey cement in East Africa are expected to increase in March compared to the previous month. To finalize, I would like to thank you for your time and attention. Please do not hesitate to contact us so we can help you. And see you in our next webinar.